Another miserable year for Blackberry began last January with the glitzy launch of its newest phones and operating system. But consumers weren't enthused. Market share stayed weak and operating losses mounted. Then the company put itself up for sale and accepted an offer for $4.7 billion from one of its largest shareholders, the Canadian private equity firm Fairfax. Now that deal is off the table, and Fairfax is promising to invest just $250 million and seeking partners for a total cash injection of $1 billion. Less than 2 years into the job, CEO Thorsten Heinz will leave. He was a company insider and will move on sometime in the next 2 weeks. Replacing him is John Chen, a US-based technology executive with a reputation for turning around troubled companies. So far, the markets have not reacted well. Blackberry shares in New York and Toronto plunged, down at one point by close to 20%. From a high of $150 in 2007, they're now trading well under the $9 a share that analysts had said the company was worth just a few months ago. It's not been all bad news for Blackberry this year. The company's BBM messaging app got 20 million takers when it was launched for Android and iPhones last month. And there are still around 75 million Blackberry users in the world, with some growth in developing markets, if not North America or Europe. It's not time yet to write off this once mighty Canadian product, but if Blackberry survives at all, it'll bear little resemblance to the technology giant that changed the way we all communicated. Daniel Lack, Al Jazeera, Toronto.